Edge runner, afterlife. They're the kings of the trades, making moves in the shadows. They're the masters of the game, slipping on the profits, watching numbers rise and fall. Living fast, make or break. They risk it all. They risk it all. Late nights with a...
Hey guys, in today's video I'm going to do a quick summary of last week's price action, then talk a little about fundamentals and what we may see for the coming week. Starting with the fundamentals, we have quite a few events next week. We start the week with Labor Day on Monday. Although the markets are open, volume will be low, so either we see strong one-side price action or sloppy price action. Then on Tuesday, we have manufacturing PMI. On Wednesday, we have JOLTS job openings. On Thursday, we have employment change and unemployment claims and services PMI. Then we end the week with NFP on Friday. So pretty heavy week of news. And as the Fed's big concern moving forward are going to be around employment, I'm not sure how the data will impact price. But moving forward on the COT data, it starts to make a little more sense now. We start to see the non-commercials jumping back in and commercials pulling back. This typically means that NQ should push higher. Now moving on to the charts. So today I'm going to start with the monthly time frame. As we had our monthly candle close, and we have some interesting things on the chart. So look at that manipulation of the order block that we had on the downside and that massive rejection. I think it's safe to say that the monthly is quite bullish now, although there is some uncertainty last week. This week gives me a lot more confidence that we're going higher now. Now moving on to the weekly time frame. So on the weekly time frame, you can see is we mitigated the fair value gap I spoke about in last week's video. Although the candle closed bearish as in the candle is black instead of blue, I'm seeing this rejection after the mitigation a bullish sign. And then if we go on the daily time frame, so on the daily time frame, we filled the fair value gap on Wednesday, and then after that Nvidia news, we drove down lower, and you can see we came down lower on the Thursday candle, but the candle is quite bullish. But in reality, what happened? We actually drove up the entire day. And then we broke the previous high. So the previous high on the lower time frame is the top of this candle. And then we had a massive reaction after. So although we started the week bearish, it appears that the draw on liquidity was met. And we may start to see higher pricing to the upside now. This looks to me like a typical IRL to ERL pattern. So what I'm seeing right now is potentially pushing to the upside, and the most likely low-hanging fruit is going to be those equal highs right here. And then if we can go through that without having a massive reaction pushing the price back down, then we should target the range high next and the fair value gaps that are open above that. But we do need to be careful once it takes those equal highs out, as well as the previous high and the fair value gaps. That could act as a draw on liquidity, and NQ may start coming right back down. So I mean, just to summarize, I'm quite bullish and would like to see higher pricing in the coming weeks or the coming week. The biggest concern I have is the impact on the employment data that will come out this week or this coming week. So I have no idea how the markets are going to react with that data. Anyways, that's it for this week's update. If you have any questions or comments, leave them below. Otherwise, I'll see you for the next one. Peace.
Edge runner, afterlife. They're the kings of the trades, making moves in the shadows. They're the masters of the game, slipping on the profits, watching numbers rise and fall. Living fast, make or break. They risk it all. They risk it all. Late nights with the charts, they analyze the trends. Calculating risk, they're the market's best friends. No fear.